Jerome Powell under criminal investigation. Trump called him a moron. But here's the real shock. Silver just broke $100 and shattered every record in history, exactly when America's central bank chief faces possible indictment. If the head of America's central bank goes to court, what happens to your money? I'm about to show you why attacking Fed independence does not just crash currencies, it creates the biggest precious metals explosion since 1980. And the mathematical pattern is already playing out in real time. January 12th, 2026. Department of Justice serves Federal Reserve with grand jury subpoenas. Criminal charges threatened against Jerome Powell for allegedly misleading Congress about building renovation costs. But here's what mainstream media won't tell you. This isn't about construction budgets. This is about monetary policy control. Powell confirmed it himself in a 2-minute video statement. The threat of criminal charges is a consequence of this Federal Reserve setting interest rates based on our best assessment of what will serve the public, rather than following the preferences of the president. Translation? Trump wants lower rates. Powell won't comply. So now Powell faces prison. The same day those subpoenas hit, silver exploded past $85 per ounce, a 5% surge that sent shockwaves through global markets. By January 20th, silver touched $95.34. Today, it broke $100 for the first time in human history. That's not coincidence, that's cause and effect. When central bank independence gets weaponized by criminal prosecution, investors flee to physical assets that politicians can't print, manipulate, or control. But here's what makes this crisis unprecedented. Unlike previous monetary panics, this attack comes from inside the system. The president who appointed Powell is now trying to imprison him for refusing political pressure. Trump's escalation pattern tells the complete story. July 2025, Jerome Powell's been very bad for our country. August 1st, Powell is a stubborn moron. November 18th, a stupid man. December 9th, not a smart guy. December 29th, Trump announces gross incompetence lawsuit against Powell. Then January 12th, criminal investigation launched. This isn't policy disagreement. This is systematic intimidation designed to destroy Fed independence forever, and markets are responding exactly as history predicts. Every major Fed independence crisis triggers precious metals explosions. 1971, Nixon closes gold window, silver surges from $1.40 to $6.70. 1979 to 1980, Carter administration pressure on Fed, silver explodes from $6 to $49.45. 2008, Fed credibility collapse during financial crisis. Silver rockets from $9 to $48.70. Pattern recognition. When Fed independence faces existential threat, silver doesn't rise gradually. It explodes violently as confidence in paper money evaporates. 2026 follows the identical pattern, but with mathematical precision that makes previous crises look amateur. Here's the current crisis mathematics that prove silver hits $150 minimum. U.S. debt, $38 trillion and accelerating. Annual interest payments, $1.22 trillion, exceeding defense spending for first time in history. Debt to GDP, 120%, the threshold where fiscal dominance becomes inevitable. Fiscal dominance means government borrowing costs become so massive that Fed must print money to prevent bankruptcy, regardless of inflation consequences. When investors realize this mathematical inevitability, they flee paper assets for physical metals. Powell understands this trap. Keep rates high, government defaults, cut rates, currency collapses. Either outcome destroys Fed credibility and triggers precious metals surge. But criminal prosecution adds nuclear acceleration to this already explosive setup. If Powell gets indicted, if Trump replaces him with compliant puppet, if Fed independence dies permanently, silver doesn't just surge, it detonates beyond historical precedent. Industrial demand provides the fundamental floor that didn't exist in previous crises. Solar panels consume 120 million ounces annually. Electric vehicles require 70 million ounces. Data centers and AI infrastructure devour another 20 million ounces. That's over 200 million ounces of industrial consumption that continues regardless of monetary chaos. Add investment panic to structural industrial demand, and supply mathematics become impossible. Global silver mine production, 844 million ounces. Industrial consumption, 700 plus million ounces. Investment demand historically, 200 plus million ounces during crisis periods. When crisis investment demand returns to historical norms, total silver demand exceeds 900 million ounces annually, while supply stays locked at 844 million. Deficit, 56 plus million ounces minimum, assuming zero increase in industrial consumption. But industrial demand is accelerating, not static. Solar capacity forecast, 665 gigawatts in 2026, up 25% from 2025. EV production, 15 plus million units requiring unprecedented silver tonnage. AI data centers, Exponential growth demanding massive electrical infrastructure. Conservative projection, 750 million ounces industrial demand plus 200 million investment demand equals 950 million total demand against 844 million supply. Annual deficit, 106 million ounces that must come from above-ground stockpiles. Current above-ground silver stocks, approximately 2.5 billion ounces accumulated over centuries. At 106 million annual deficit, existing stockpiles last 23 years maximum. But stockpiles aren't evenly distributed or available for commercial sale. China controls 60 to 70% of refined silver supply and implemented export restrictions January 1st, 2026. Only state-approved companies can export silver with government licenses. This removes 500 to 600 million ounces from global commerce immediately. Subtract Chinese hoarding from 2.5 billion global stockpiles, and available commercial silver drops to under 2 billion ounces. At current deficit rates, plus Fed crisis investment surge, available stockpiles last 15 to 18 years maximum. But here's the exponential acceleration factor. Stockpile depletion isn't linear. As supplies dwindle, prices spike, triggering additional investment demand that accelerates depletion exponentially. Mathematical modeling shows tipping point occurs when annual deficits exceed 150 million ounces. At that threshold, remaining stockpiles get hoarded by industrial users desperate to secure multi-year supply contracts. Available spot market, silver vanishes. Current trajectory reaches 150 million ounce annual deficit by late 2026, assuming modest investment demand increase. Fed crisis could trigger massive investment surge that hits tipping point by summer 2026. When commercial silver availability hits zero, when industrial users compete against panicked investors for remaining supplies, when governments stockpile strategic materials during currency crisis, silver price discovery breaks completely. Historical precedent, Hunt brothers accumulated 200 million ounces and drove silver to $49.45 in 1980. Today's setup involves 900 plus million ounces of annual demand, competing for 844 million ounces of production, plus dwindling stockpiles. Hunt brothers controlled roughly 15% of available silver supply. Current mathematics suggest deficit equals 12% of total supply annually, with China controlling another 60 to 70% through export restrictions. When 72 to 82% of silver supply becomes unavailable to free markets, deficit plus Chinese hoarding, remaining 18 to 28% must satisfy all Western industrial and investment demand simultaneously. Price response becomes exponential, not linear. $100 silver breaks psychological barrier. $150 silver forces industrial demand destruction. $200 silver triggers global strategic stockpiling. $300 silver matches inflation adjusted 1980. Peak of $194 adjusted to current monetary base. Fed investigation provides perfect catalyst for final phase transition. Citigroup upgraded targets to $5,000 gold and $100 silver, citing renewed uncertainty on Fed independence. Goldman Sachs and JP Morgan revised precious metals targets upward based on regime uncertainty and institutional risk premium. When major banks officially acknowledge Fed independence crisis as investment thesis, mainstream adoption accelerates exponentially. Retail investors, pension funds, sovereign wealth funds, and institutional managers all compete for limited silver supply simultaneously. Physical delivery demands exceed available inventory. Paper contracts settle in cash against holders' will. Premiums explode $20, $30, $50 over non-existent spot prices. Industrial users pay any price for guaranteed supply, while investors scramble for remaining physical metal. Timeline acceleration. Powell's criminal case moves through courts over next 6 to 18 months. Each hearing, each indictment, each appeal creates fresh waves of institutional panic. Silver responds with explosive volatility toward mathematical equilibrium price discovery. Conservative scenario. Fed maintains independence, Powell survives, silver reaches $150 on supply deficit alone. Moderate scenario, Powell replaced, but Fed independence preserved, silver hits $200 on institutional uncertainty. Aggressive scenario, Fed independence destroyed, compliant chair installed, silver explodes to $300+ on currency collapse fears. Every scenario favors silver over traditional assets because mathematical fundamentals remain unchanged regardless of political outcomes. Industrial demand continues. Supply stays constrained. Chinese export controls persist. Deficit mathematics compound. Political resolution doesn't fix supply deficit. It only determines timeline and magnitude of price adjustment. Gradual Fed transition allows measured silver appreciation. Chaotic Fed destruction triggers explosive disorderly price discovery. Jerome Powell, under criminal investigation, represents final catalyst in decade-long silver setup. Industrial demand explosion, plus supply constraints, plus Fed independence crisis, plus Chinese export controls create perfect storm for precious metals. Silver at $100 is not the destination, it's mile marker one on journey to mathematical equilibrium pricing. When governments attack their own central banks, when industrial demand exceeds mine production, when export controls fragment global supply, when investment panic meets structural deficit, price doesn't adjust smoothly. It explodes toward levels that balance supply and demand through pure mathematics, regardless of political outcomes or investor preferences. Silver just broke $100. The Powell investigation guarantees it won't stop there. The signs are everywhere if you know what to look for. Silver lease rates spiked to 200% annualized. That's desperation borrowing by industrial users who cannot secure physical supply. Backwardation appeared in futures markets. Spot silver trading above forward contracts signals immediate supply panic. Physical premiums exploded globally. Retail silver coins trading $15 to $20 over spot price. Industrial buyers paying $25+ premiums for guaranteed delivery. When physical costs $125, but paper trades at $100, the paper price is lying about actual metal availability everywhere. COMEX registered silver inventories collapsed 70% since 2020, from 346 million ounces to under 80 million today. London Metal Exchange stocks hit historic lows. Shanghai inventories at decade-low levels. Global vault drainage accelerating rapidly as industrial users stockpile critical supplies. Jerome Powell's criminal investigation accelerated timeline that was already mathematically inevitable. Silver would have hit $100+ eventually based on supply deficit alone. Fed independence crisis just compressed multi-year adjustment into months of explosive price discovery toward mathematical equilibrium. The investigation guarantees silver acceleration beyond $100, faster than anyone expected or prepared for properly.